also, I'm trying to keep really very realistic time frame here. As you can see, tech gets beat up. We're very used to this. I would say this is more severe than typical, but I expect and fully prepare for 40 to 60% drawdowns every single year. There's always a new narrative as to why that drawdown occurred. This one's steeper. We're seeing some tech stocks get beat up even more than 60%. Some are hitting 80%. It's very, very scary if you don't have a strong understanding of your time horizon. I can't stress that enough. So I could sit here and tell you, here are a couple companies I think are interesting, but 2022 is not the right year to put your money in and expect to get it back out. If you're going to put your money in 2022, you need to be fully prepared to not touch that money until 2025, maybe 2027. The very, very best investors in the world who do this professionally and make, 8 figures, 9 figures off of emerging tech are venture capitalists, and they cannot withdraw their money for 7 years, even if there is a recession, a depression, or whatever. They cannot take their money back out. So you got to really think, about what are the most professional and highest yielding investors doing in tech. They're holding an emerging product and company and management team for 7 years. Tech needs time to breathe and grow and pull back and expand. And what they're proposing to do, if you take on the metaverse, is absolutely incredible. I mean, to create some would call it a virtual reality. Some would call it, an augmented cyberspace. Some would say it's basically more of a 3D internet. Whatever you want to define it as, whatever this becomes is going to be so incredible that to put your money in one given year and expect to get it back out 6 months later is not being realistic at all. If you're investing in the metaverse, 10 years, 800 billion, you should expect to be in it for 5 to 7 years. It's a very early trend. So more important than my exact opinion on a pick is time horizon. And I can't stress that enough because the market is really, really hard to time. And the hardest thing to do is to try to withdraw your money, time the market, and get back in. If you're a day trader, and I'm just really touching on this point because of the current environment we are in, if you're a day trader and you dedicate every minute of your life to trading stocks, you rarely know what they do. You cannot tell me the difference between NVIDIA and AMD or Intel, for instance. They will exit very quickly and they will be quite proud of that. But an investor like myself, who truly believes NVIDIA will be one of the most valuable companies in the world, and I've expanded on that in analysis, why would I ever exit NVIDIA? Because I truly know what this company is doing. So those are two different styles, and I don't get confused as to what my style is. I don't look at the people that exit not knowing truly what the market will deliver in with the metaverse or AI or automation, and get concerned that they may have pulled their money out and maybe I should have. That doesn't cross my mind. Because to time that means that every second, every minute of my day, I have to be prepared to get back in. And rarely do people exit and think to get back in because they've emotionally and psychologically closed this position now. So to me, long story short, it's all about time horizon with tech. And I think you got to be really careful of seeing the market give losses. NVIDIA is very much down right now. I've been through many moments where NVIDIA was down and I did not budge. To me, there's no doubt where NVIDIA is headed. So that's just an example. I mean, Unity is a great example too. Unity has gotten clobbered a couple times since its IPO. If you look at the company, they rank really high in gaming revenue. And like I said, the lowest hanging fruit for the metaverse is going to be gaming. And now they're able to take their serendipitous position and go and serve other industries, your architects, your automotive engineers, whatever it is. So again, it goes back to, if you're a very, very active stance, you might have closed 10 positions because you don't know what you're not really diving super deep into what they do. But to me, finding certain stocks, and I've played a little bit with my entry in Unity, but and just sitting there and letting them become the tech that they've said in their earnings calls they already have product market fit, they're already growing, is one of the most important pieces. So I just want to, I'm going to talk about what companies I like. I think the most important thing that I can communicate is that when you find a company that you like, know your style. Are you an investor, or are you a day trader or a very active? Knowing that by large and far, the best gains in tech come from venture capitalists who cannot touch their money for 7 years. So they need to get an exit. So I just want to make sure people understand that if you're trying to get into the metaverse, day trade, get quickly back out. If the market doesn't like high beta, then that's a losing proposition. And for me, at least, because why would I ever exit quality companies? We trim them. So if we see them topping out, we'll trim, and we try not to buy at the top. And those trade alerts are sent to people, where we did not buy at the top. We bought, as the gains were going up. But at the same time, the most important thing that I'm communicating is the time horizon is absolutely essential for the metaverse or anything tech related.
Mm-hmm. That's a really good point. I think a lot of people try and get into these high growth names after they've already gone up. They think they'll be able to make a quick buck. And that's when the market can really turn on you and you end up really losing money. And, the market can really play with investor psychology a lot. And obviously a good time to buy growth stocks is when they're down significantly while the fundamentals of the business haven't really changed that much. How do you ensure that you're not buying a falling knife, so to speak? Are you relying on technical indicators for adding to positions? Because we've seen a lot of growth names really get hit recently, as you've already mentioned.